Wow, hello guys, what a week. In today's video, I will give an overview of the stock market, explain why there will be a huge opportunity to invest in Tesla, Disney reopened their theme parks here in Florida, Buffett's Berkshire Hathaway doing buybacks, and I will give you guys my expectations for a huge earnings week coming up. Please smash that like button and subscribe since it really helps my channel out. The stock market was kind of volatile this week. First, we have the S&P 500 which traded in a tight range throughout the whole week and ended up 0.95%. Same happened with the Dow Jones which ended up on the green by 0.30%. But the Nasdaq did have a rally the whole week led by Tesla and ended up on the green by 2.48%. I said that it was led by Tesla since Tesla's stock went up 21% in a single week. It has gained $108 billion in market value in just 2 weeks, which is insane. I do have to say that in my opinion the stock is very high right now. Still, I will do a video about Tesla since they already pulled out their delivery numbers and production numbers. Also, if you would like me to make another video about NIO, analyzing their latest report as well, let me know in the comment section below. But talking about Tesla, I found this interesting article titled Why Tesla Margin Requirement Changes Could Be a Buying Opportunity. Basically, what it says is that a trading and investment platform called E-Trade sent an email to investors explaining that margin requirements for Tesla shares have risen from 55% to 70%. What this means is that a lot of people that received that email had to sell their Tesla shares. Again, they had to, didn't want to. Why? Okay, when we talk about margin, we are talking about money that investors borrow from a brokerage to buy stocks, options, or whatever they want to invest on. Then a margin requirement is basically a percentage of a stock that the investor has to pay for in cash, and raising it from 55% to 70% is huge. What the article speculates is that the big institutions are buying shares of Tesla and brokerage firms increasing their margin requirements is just a move to free up Tesla shares and sell those to larger institutions. On the other hand, we can see a selling pressure in the short term, which could create a buying opportunity for us retail investors. Remember guys, I have a Discord chat completely free if you would like to join. Link is down below in the description. Now, Disney, Magic Kingdom and Animal Kingdom reopen on Saturday here in Florida, and Epcot and Hollywood Studios will open on July 15th. Even though they did not specify ticketing numbers, they said that people are already booking reservations to visit Disney's parks and resorts as far out as 2021. I would think that they could have easily sold out for the first day, as it happened to Universal Studios and Disney in Shanghai. I was definitely expecting good feedback from this reopening since people have been in shutdown for so long that going to a theme park is quality family time. On the other hand, Disneyland California is still waiting for theme park reopening guidelines from the government officials, but I expect them to have the same increase in reservations after they announce their reopening date. Obviously, I do not see a huge increase in revenue for the theme park segment in the third quarter, since even though they did not release attendance numbers, it is estimated that the park would allow less than half of its capacity in the park to start. Meaning that if they decided to open only with 30% capacity as they did in Shanghai, they only allow 17,000 members in Magic Kingdom and 11,300 for Animal Kingdom. Also, even though it's summer and summer might be their best season, people are not currently traveling. Now, something that caused a lot of volatility in the market since December 2018 was the trade war between the US and China. It was a very uncertain year, and obviously not like this one with the pandemic, but still that caused the S&P 500 to end up in 2018 down because of the trade war. Finally, at the end of last year and beginning of 2020, they signed an agreement for phase 1, which both countries agreed several terms. For example, China agreed to increase purchase of American products and services by $200 billion and $77 billion in additional manufacturing purchases over the next 2 years. The US agreed to cut tariffs on $120 billion in Chinese goods to 7.5%. The thing is that the pandemic started and China has made some purchases of US farm goods but are running far behind the pace needed to meet their first year goal. On July 10th, President Trump said that he is not thinking about a possible next stage on these trade war deals, since the relationship between the two countries has been damaged since the pandemic started. Are we going to see another trade war throughout the year after the pandemic? Will that cause a downtrend in the stock market as it happened in December 2018? Let me know in the comment section below what you think about this, guys. Now, a lot of you may already know that I started buying Berkshire Hathaway stock between May and June. Currently have an average cost of $175.76 per share, meaning that I am up in my position 4.15%. I do think it is still at a very good price to continue increasing my position, and if it drops again, even more. This company has good potential and it's a way to diversify my portfolio since theirs is very well diversified. Something that is important to know is that Berkshire Hathaway reduces share count, suggesting possible buybacks. Let me explain something. In July 2018, there was a change made in Berkshire buybacks policy. This new policy basically stated that Warren Buffett and Charlie Munger could only repurchase Berkshire Hathaway Class A and Class B stocks only when both of them believed that the current stock price is below Berkshire's intrinsic value. Also stated that they could only repurchase as long as Berkshire's cash holdings were above $20 billion. And as I said in my last video, Warren Buffett reported that they had $137 billion in cash. In 2019, they spent $5 billion in stock repurchasing and already spent $1.7 billion in Q1 of 2020 at a price range of $214 and $226 per share. What I want to say with all this is that we saw a drop in share count by 1.2% since April 23rd, meaning that they might have repurchased stocks. And come on, if they were willing to pay $226 per share for the Class B stock, they will most likely be interested to repurchase at current prices. According to this Yahoo article, if Berkshire actually repurchased those shares after April 23rd, they might have spent between $4.9 to $5.9 billion, which is a huge amount since they spent only that throughout the whole 2019. Still, in his annual shareholders meeting on May 2nd, Buffett was asked why he had not repurchased more stocks, and he answered that the price had not fallen to where it really feels way better to them than other things. So we definitely have to wait until August to see their Q2 earnings report and see how many stocks or shares they really repurchase on Q2. Now, we have an interesting earnings week coming up since the worst earnings season just started, and also because we will see the CPI inflation data on Tuesday. With this Q2 earnings, we are really going to see how this pandemic actually affected companies and the whole economy, since analysts are expecting a huge drop of 44% in earnings. Next week, we have earnings report from huge banks and companies such as JP Morgan, Wells Fargo, Citibank, Bank of America, Goldman Sachs, Netflix, Pepsico, Delta, Dominos, and more. With bank earnings reports, we are going to see actually how bad the economy is or has been through Q2, since a lot of people were unable to pay their mortgages, credit card debts, and other personal loans due to a huge increase in unemployment. For banks, analysts are expecting a huge decrease of 52% in earnings. We do have to take into consideration that the Fed is backing the banks up, but has also imposed some restrictions in order to maintain liquidity and be able to help the economy and small businesses. Those restrictions basically say that banks cannot buy back their own stocks or increase dividends payments in the Q3. Last month, several banks announced that they will maintain their dividend payments, but Wells Fargo was the only one that decided to cut theirs. As a Wells Fargo shareholder, I understand those restrictions, but it has made me rethink my investment since dividends represented a huge part of my decision. We do have to take into consideration that they were already going through hard times before the pandemic. Still, even though banks are not at their best since interest rates are very low, People are expecting them to generate as much as $24 billion in fees from the Paycheck Protection Program that was offered by the Fed in the last month. This could definitely help banks a bit while their other sources of incomes are struggling. For companies like Netflix and Dominos, I do expect to see an increase in revenue. Even though the economy started to reopen in June, we were shut down in April and May, and a lot of people would only watch Netflix and order food delivery. With Netflix, we have to take into consideration how many new subscribers enrolled to the platform, and with Domino's, we have to see if they were able to maintain their momentum from Q1, where they beat expectations by a lot. As banks will give us an outlook of the economy, Delta will give us an outlook on the tourism industry. Analysts are expecting them to report a huge decrease of 89% in revenue and over 280% decrease in earnings for the quarter. I would expect them to slightly beat those expectations, and if they do, it would bring a lot of stability to the industry that has gone through a lot due to the pandemic. I do have to say that I think all the negativity and bad news might be already priced in the stock market. Although I do not expect any of these companies to have a forecast or expectations for the second half of this year, these earnings will help us understand how these companies and banks have been able to survive one of the hardest quarters in the history of the economy of the US. Hope you enjoyed the video. Please smash that like button and subscribe. Stay safe. Thank you and see you next time.